How many credit cards should you have to have the best score possible? That's the real question. And depending on who you ask, the answers are all over the place. Some say that having one is enough. Others think having 5 or more cards can help you earn more rewards. And then there are folks who think credit cards are the problem altogether. But here's the truth. The number of credit cards that you have absolutely affects your credit score. And if you're not in the right range, your score is not as high as it could be. In this video, I'm gonna walk through the levels as the amount of cards that you have and how it impacts your credit goals. You will learn at each level which amount gives you the highest boost, the pros and cons, and the ideal card setup. Let's start off with level 0, the folks who don't have any credit cards or are totally against using them. Usually these are die-hard Dave Ramsey followers who believe credit are the devil and cash is king. Now, I actually do agree with Dave Ramsey on a few things, but let's be real, in today's world, having no credit at all can make life way harder than it needs to be. Even if you never plan to carry a balance or borrow money, there are still tons of things that require a credit check. Things that most people don't ever think about, like car insurance, utility accounts, even your cell phone bill. Now, these might not be hard inquiries, but companies will still review your credit to see how financially reliable you are. If your profile is thin or non-existent, it could make basic services harder or more expensive just to get. And if you're ever in a bind, or maybe your emergency fund is low or wiped out, having no access to credit can put you in a very tough spot. Look, I get it. Some people have been burned by credit, maybe they overspent, ran up balances, or just got in too deep. But at the end of the day, it really comes down to discipline and self-control. When you want to play the game the right way, credit can work for you. I've done it myself over and over again. I've used 0% APR cards to fund real estate, start businesses, and even travel, all without paying a dime in interest. So if you're totally anti-credit, then this video might not be for you. But if you're open to learning how credit cards can impact your score and how to use them to your advantage, then keep on watching. Now, if level 0 is having no cards at all, then level 1 is where most people start. And this is what I call the safe zone. These are folks who just have one credit card. And on the surface, it seems smart, simple, and easy to manage. But hey, one card is definitely better than none. But here's the truth. Having one card can quietly cap your credit score, even if you think you're doing everything right. If you're sitting at level 1, you're not doing anything wrong, but you're also not unlocking your full potential. Here's why. You're only building history with one account. Your credit mix stay limited, and your utilization rate can't spike fast if that one card carries a balance. It's like going to the gym and only doing bicep curls. You're only working one muscle, but leaving the rest untouched. For example, if you have a $1,000 limit and spend $400, your utilization is already at 40%. If this is the balance at the closing date, this can drag your score down. But if you had 3 cards with a combined $3,000 limit, that same $400 in spending only puts you at around 13%, which looks much better to lenders. Now, a lot of people stay at level 1 just out of fear because they're afraid of more cards that they will hurt the score or just lead into debt. But here's the truth. When used responsibly, more cards equals more leverage, not more risk. If you're someone who wants to keep it simple with just one card, this is most likely your starter card. Maybe you just got one from your bank or credit union and you really are not really focused on optimizing, and that's perfectly fine. But if you're down with just one card by choice, here's what I recommend. You want to choose a card with a high credit limit, no foreign transaction fees, and some form of rewards. If you're keeping it super simple, I would just go with a flat 2% cashback card or one that earns flexible rewards. Personally, I would go with the Bilt MasterCard. You can earn rewards just by paying rent, there's no annual fee, no foreign transaction fees, and your points can transfer to travel partners. Not many cards offer that, especially at no cost. Another great option is the Capital One Save Your Rewards. You get 3% back on groceries, dining, and entertainment, and 1% on everything else. Plus, there's no foreign transaction fees, which makes it perfect for everyday spending and travel. Now, if you're more credit union minded, I would definitely check out PenFed. They got a surprisingly strong travel card, and the annual fee can be waived if you become an Honors Advantage member. And the best part is that anybody can qualify for this credit union. So if level 1 is the safe zone, level 2 is the sweet spot. And this is where most people should be if their goal is to build the highest credit score possible. In this zone, this is where you're getting the most impact on your credit cards without taking on unnecessary risks or complexity. This level hits all 5 major credit score factors, and it hits them all pretty well. If you're not aware, as a quick reminder, those 5 categories are payment history, amounts owed, length of credit history, new credit, and credit mix. So let's break this down. So first is the payment history. Managing 2 to 3 cards is simple. You're not being overwhelmed, but you're giving the scoring model more positive payment data to work with. And let's be honest, staying on top of 3 cards is a lot easier than trying to manage 20 or 30, but I'll talk about that a little bit later on. Next is the amounts owed. With multiple cards, your total credit limit increases. This means that if you forget to pay off the balance in 1 month, the overall impact on your score is much smaller because your utilization is spread across more available credit. Next up is the length of credit history. By sticking with a few cards long term, you're not consistently resetting your average age of accounts. These cards remain open, they age well, and strengthen your credit profile over time. Now, when it comes to new credit, since you're not constantly applying for more cards, your hard inquiries will stay relatively low, meaning that whenever you need credit, you will have better approval odds. And lastly, your credit mix, which is a factor that shows how well you manage different types of accounts. Having 2 to 3 cards demonstrate that you can handle multiple revolving accounts, which boosts your score in this category, especially when you pair them with auto loans, student loans, or mortgages. You can stay at this level for the rest of your life and you should be totally fine. With 3 solid cards, you have a strong score, low risk, enough flexibility for emergency purchases and rewards, plus having 3 cards give you a natural safety net. Now, I don't recommend using credit cards as an emergency fund, but if you're ever in a real pinch, that available credit is there to float you temporarily. Now, the biggest downside with this level is that you're managing more than one account. But honestly, with autopay set up, this is barely an issue. The only real risk is temptation. Next is that if you're carrying high balances or not paying in full, you can easily fall into a debt cycle. And credit card interests are no joke, often around 20% or more, which can bury you faster than you think. Also, if you're not paying close attention, it is easy to forget one bill or take a hit on your payment history. That's why setting up alerts or autopay is key. Now, if you're in a situation where late payments, collections, or charge-offs are already hurting your credit, don't go looking for a new card just yet. Before you rebuild, you gotta repair. That's why I exactly built Credit Rehab Pro, a DIY software that helps you analyze your personal credit report and build a custom plan to fix it. We've helped people get late payments removed, challenge incorrect data, and take control of their credit again on their own terms. If you have negative marks holding you back, click the link down below or scan this QR code on the screen to check out Credit Rehab Pro today to get started. Now, if you are planning to stay at level 2 but still want rewards and simplicity, you can build a mini system that works beautifully, like the Chase Trifecta, which includes the Chase Freedom Unlimited, which gives you 1.5% back on everything, plus bonus categories. Next is the Freedom Flex, which gives you 5% back on rotating categories every quarter, and also the Chase Sapphire Preferred or Reserve that gives you travel perks, point transfers, and no foreign transaction fees. With this combo, it gives you strong earning potential, flexible points, and a simple management system with just only 2 to 3 cards. Now, this is not the only trifecta. Other banks offer similar setups, but the goal here isn't to chase bonuses or over-optimize. It's just to keep things simple and score-friendly. So yeah, you can stay at level 2 forever and just call it a day. But what if you already got more than 3 cards, or you're ready to start maximizing points and benefits? That's where level 3 comes in. At this point, it's not just about building a great credit score, it's about maximizing the benefits of your credit. There are usually 2 types of people in this zone. First is reward maximizers. These are travel hackers and point chasers. They're the ones who are building out systems to earn miles, cashback, and perks. And second, they're funding strategists. These are folks who are looking to unlock higher credit limits, leverage 0% APR offers, or fund real estate or businesses with low cost credit. Personally, I fall into both categories. Right now, I got over 40 something credit cards and it's still growing every single month. So I get this asked all the time. Does having that many credit cards hurt your credit score? And here's the truth. Yes. It does, but not as much as people think. Earlier, I showed you a chart that reveals most optimized credit scores usually have around 2 to 3 cards. But once you go beyond 4, the credit score impact becomes minimal, especially if you're managing everything well. This is how having multiple cards can affect your score. First is your average age of accounts. When you add a new card, it reduces your average age, especially if your profile is still thin. That's the biggest issue if you only got a few accounts. But once you have 10, 15, or 20 cards, your older accounts help anchor that average, and newer cards don't hurt as much. Next is your new credit activity, which makes up 10% of your score. Every time that you apply for a new card, it adds a hard inquiry to your report. Typically, these impact your score for about 6 months, and lenders still consider them up to 12 months, especially if you're applying for mortgages or auto loans. So yeah, if you're thinking about financing something major, you don't want to be opening new cards left and right. Another common question people ask is that, should I just close my cards just to get back at 3? Here's what happens when you close a card. First is that you lose part of your total available credit, which can increase your utilization ratio. Next is that account stops reporting new data, but it stays on your credit report for up to 10 years. So closing an account doesn't automatically delete it, but it just can hurt your credit score, especially if it drops your total available credit. Here are the biggest pros with level 3. You most likely will have lower utilization because more cards will equal more total credit, which makes it easier to keep balances low. You also have a thicker credit profile. Lenders like to see a long, positive history across multiple accounts. You also get access to more rewards and perks, so think travel credit cards, lounge access, insurance protections, etc. And lastly, you have funding leverage. You can use 0% APR cards to invest in business, real estate, or higher ROI moves. Now, with all the pros, there are some cons at this level. The first one is that you really have to be organized. Missed payments on even one card can wreck your score. Next is that most likely you have more frequent applications, which will increase your amount of inquiries. So if not spaced out properly, it can lower your odds of approval. And lastly, short-term credit score dips. Each new card that you add temporarily reduces your average age of accounts, which can reduce your score. Next, let's talk about the recommended strategy at this level. So here's the thing. If you're in level 3, the best credit card setup really depends on your personal goals. Are you chasing welcome offers, looking for 0% APR to invest or float expenses, or just trying to optimize your points for travel? At this level, you're more than likely over 760, so you have access to premium cards and most funding opportunities that most people don't get access to. Personally, I like to add a new card every 3 to 6 months, especially if I'm working on a funding sequence or stacking travel points. Now, if you're unsure about what card to apply next, or you don't want to risk a hard inquiry, I recommend using a card finder tool like the one I have here. It's a free tool that shows you the best credit cards based on your credit profile, without triggering a hard pull. You just enter your info, and it gives you a tailored list of the cards with the highest match potential. It's not perfect, but it gives you a clear idea of where you stand and which cards that you should target first. You can click the link down below or scan the QR code to check it out. Alright, so here's a quick recap. A level 0 means that you have no credit card at all. This is safe, maybe, but not strategic. Level 1 is just one card. You're building, but your growth is kind of limited. At level 2, this is the sweet spot. 2 or 3 cards will really optimize your credit score. At level 3, which is 4 or more cards, this is where you start playing with rewards, funding, and advanced leverage if you can manage it. But now you know exactly how many cards to have. The next question is, which card should I get next? I broke that down in this next video here, the only 5 credit cards that you need. Hit that video over there, and I'll see you over there.